In the metals quadrant today, taking a look at the April gold futures contract, which gapped higher to finish its third session of higher prices in the last four, but it dropped so much from its intraday high that it actually finished negative to its own open. Yesterday, the close was 2044.60 and the low 2047.40, which was a small gap higher of about 14 basis points, 0.14%. The high today, 2068, was up 1.14%. We pulled all the way back to finish versus yesterday's close at 0.4%, but finished basically slightly negative to unchanged versus today's open. So if you're looking at a candlestick chart, you could probably see a negative candle despite gold being higher on the day. From the recent low on January 25th, now gold sits higher by only about 1.36%. Volume was good today, however, and that may be because we've now rolled into April being the front contract. Gold's price is awaiting the FOMC decision tomorrow, but more Powell's comments post the FOMC decision. The FOMC Fed Watch tool at the CME has about a 97.9% chance of no rate change at tomorrow's meeting, but the opportunity for Jerome Powell to push back on the 6 rate cuts that the Fed Watch tool currently shows the market having priced in as the highest probabilities is a reason for short-term traders to take profits on longs or even cover gold shorts that they may have done the previous couple of days or even today. It's not just a weaker dollar that drives gold higher traditionally, not every day, but traditionally it does. But it's also lower interest rates. So Jerome Powell's comments will be under the microscope of gold traders. Speaking of rates, the 2-year note yield moved higher today while the 10-year note yield moved lower, which all else equal means that the market thinks the Fed will leave its short-term rates at a higher level and that inflation will fall, dropping the yield on the 10-year. That could be a negative indicator for gold prices, given that traditional inverse relationship between short-term yields and the price of gold. We finished today with the 2-year up about 4 basis points and the 10-year down about 7 and the 30-year down about 8, taking that 2 cents inversion in the wrong direction in the range of -30.